Hey everybody, welcome back. Well, we can see the reversal right here in the S&P 500. We're going to go through the NASDAQ, really what happened today, what sectors benefited, what sectors absolutely imploded. But we can also see the same exact move here in the NASDAQ, how we just imploded. RTY, not as big of as an implosion. We're going to get rid of that for a second. And what we really just want to focus on is what exactly is happening here, because at the same time, you can also see that the 10-year actually rallied and the VIX did spike for once and actually do its job. But we didn't see that kind of panic across the board. So what exactly is happening here? Now, before we even get into that, what we should do is come here and just take a look at the beginning of the market. We can all see the contemplation here and the really steep dive, right? But if we go back and just take a look at that 830 level, 815 level right in here again, you're going to start seeing a little bit of movement in here. And of course, that was the economic data today. And it really wasn't that big of a deal. The big data obviously is tomorrow, non-farm payrolls. But I do think it's important to note just how sensitive we are to any economic data right now. And you can see that right in there, right? And we just popped right on it. And quite frankly, it was pretty much a nothing burger as far as data goes. So I think that's important to recognize. Now, the question really is going to be, why did we sell off, right? So we're trying to understand why, so we can understand the macro, the fundamental, and the technical reasons. Why did we sell off, right? There's two events out there, right? We have one event that we've known for some time, and we have another event that maybe he alluded to something he shouldn't have. So let's just jump right into it. Now, right now, what we do is we have pretty much what I'll refer to as rampant speculation as why we dropped. And I'll show you at the end of this why we really don't have anything clear. People can obviously comment below as why they think. But the first thing is, Biden to Netanyahu, protect civilians in Gaza, or what U.S. policy will change? So the answer here is nothing has changed ever in regards to this since it started. So I don't really view this as the reason. This has been out there all day. This is 3:56 at the time of this particular article. But this has been out there that we're going to change our stance, or the U.S. is going to change their stance. No matter what has transpired, this has not happened. So I would say that this is probably not the reason. But I do think one of the reasons that we could see this is the increased conflict because of what's happening in Iran. And the gentleman that was killed, and then you have all the other people now that are in Iran that are starting to, quote, panic a little bit there. And I think that this is an issue, and maybe that uncertainty could be one of the factors. Then we get into this one that we'll dispel. Kashkari raises the possibility of no rate cuts this year. April 4th comes out. Stocks fall ahead of jobs report on Friday. Oil rally amid geopolitical tensions. We're going to talk about that as well. S&P fell 1.2%, wiping out grain gains. Surpassed Brent's up 90 because the Israeli prime minister will operate against Iran and proxies by pursuing those who harm it. Okay, so obviously this is spreading, so oil is going higher. That must mean oil stocks are going higher. Not exactly, and we're going to talk about that. Bond yields fell across the U.S. curve despite the Federal Reserve Kashkari statement: rate cuts not be required this year if inflation progress stalls. He was among more than half a dozen central bank officials who spoke ahead of the March job report, only that he was not scheduled to speak today, which is kind of interesting. Healthy, according to the survey of economists, employment gains continue in March while wage is moderated. Payrolls are expected to increase by 200,000 in the fourth consecutive month. Average earnings are expected to rise. All right, so this is all the data that we have so far, right? And the hits keep on rolling. So yields fall ahead of March payrolls. Treasury yields fall ahead. So if he says that we're not going to cut rates, they buy bonds? No. If they're not going to cut rates, what do? They dump bonds. So Treasury yields fall ahead of March payrolls. So are they rallying because of March payrolls, or is it because of the geopolitical events out there and they're concerned about what's going on? Treasury yields fall ahead of U.S. March employment reports, which economists survey. Wall Street Journal expects to bring down slower labor market, could facilitate interest rates, blah, 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 decline. If it declines, what are they doing? They're buying bonds. If rates drop, they are what? They are buying bonds. Okay. So now you sit here and now we're looking for payrolls are expected to slow to 200 from 275. Now you have a bunch of people that are looking at the market and saying, by the way, ADP was good, so therefore ADP non-farm payrolls was good, therefore BLS will be high as well, except that ADP average is 30 employees at those companies, which is very different than what we have here. All right, let's keep on rolling. So that leads us to maybe it's U.S. Secretary Blinken says Ukraine will be a NATO member. Well, they've been saying that Ukraine's going to be a NATO member forever and a day. So this is nothing new. Okay, well, this was released publicly at 12:42 Eastern Standard Time, and this was on Reuters on The Wire. So is this the reason that we dropped? And I'm going to say that no, this has been out there for some time. And no one can be a NATO member while they're in a conflict, just FYI. So that's the end of that. Now, I'm not the only one that knows that, but this is where I think it gets somewhat interesting. These were the speakers. I don't have Kashkari anywhere. And by the way, you have 2 more this evening at the time of filming this. So we have that. Then we come into roll right into Friday. Now, Friday, the previous was 275. The consensus is 200 and the forecast is 200. We're going to have to watch this very closely. The one thing that I will say is right now, the market is extremely sensitive to any economic data. Extremely sensitive. The fact that we moved on data today from just normal payrolls was kind of crazy, or claims rather. So expect tomorrow morning early to be extremely volatile. I think the volatility could be a reason for it. Now, you're going to want to check and see, are the jobs, government payrolls? This is all trading. This is Trading Economics calendar, and anyone can go there. It's free. So we have all this, right? And we have to watch. So why I like this is they break it right out for you, and it's all free. Just you can go to the website, Trading Economics. I have no affiliation with them. What this will do for you is you'll be able to say, okay, well, non-farm payrolls is up, great. Let's say it knocks the cover off the ball. Well, what if manufacturing jobs are down and all the government jobs are spiking so he can say that he's got a great economy, right? You wouldn't be the first, president in history to do something like that. Not only do you have that, but then right after that, we're going to have the hits keep on rolling because why not have more Fed speakers, right? So then we're going to have that going for us as well. So what do we have here? We have an environment where we have the following. We have escalation of war, okay? And we have a Fed coming out and saying, well, we might not even cut rates this year. Well, that's why we sold down, okay? Well, here's the larger issue with that and making that why we sold down. So in front of us is Fed Watch. And what I want to show before we even get started, just so we're all on the same page, this is May 1st, June 12th, July. So these are the dates, and you can actually see and use up here, and you can use the exact data. So let's just move up and look at May for a second, and then let's just pay attention to May, and then we'll go through, look at the couple months. All right, so Fed guy comes out and says some things. Fed guy comes out once a day and says some things, right? Nothing new. But today, for some reason, we're saying that that's why we sold down. Here's kind of my issue with that. Here's May 1st. Now, if that's the case, and this is why we did this, then yesterday there was a 0.7% chance of a rate cut. 0.7% chance of a rate cut, okay? Now there's a 7% chance of a rate cut. So between now and yesterday, we're saying that we sold down because he said that they're not going to cut rates. But the Fed, the people that actually make their bets and buy billions of dollars worth of bonds, now increased the opportunity for the rate cut substantially today. And bonds rallied, by the way. All right, so let's go look at June. Okay. So June, the chances of staying current dropped from 37 to 30, 61.8 to 67. All right, let's go out to July and see if there's any major change there as well. Now, this is where it gets a little interesting because not only is there less of a chance of rates being here, we're down to 17% chance by July, but there's even a less than 50% chance now that you're only at one cut. Look at the rates and how they changed. You're up to 2 cuts possibly in July, and that increased from 24.6 to 30.7. And then 3 cuts actually went from 0.2 to 2%. Doesn't sound like a lot, but it's kind of silly that if we're betting that this guy is telling us that they're not going to possibly cut rates, and that's why the market dropped, well, why are the people that bet on bonds and rate cuts actually increasing the probability of a rate cut? If that's why we dropped. So from my perspective, I think you have to look at this data tomorrow at 8:30 and think a little differently. So when we look at this market and say, why did we sell off? Could we just have sold off because things are uncertain? Is it possible that people are looking at the beginning of the year and going, you know what? I don't know what this number is. Because early this morning when we started, it was, oh, this number leaked. It leaked. So therefore it's going to go up. And then here, oh, it leaked. Now, I'm not saying it didn't leak. Things leak. Let's just call it what it is. But the reason for walking through all that data is because none of that data correlated to anything that happened in the market. None of it. Unless you're going on the premise that it was, oh, it's war. So we're going to war. Okay, well then we need to buy gold, right? Gold sold down. All right, so what are they buying? Well, oil went up, right? So since oil went up, oil exploded right around that 2 o'clock level. So clearly it's because of what Israel's going after Iran, and then oil spiked. All right, and that's right around that time. So the highest correlation between anything that we could say, if we were looking for the highest correlation that we could find, this is pretty much it, right? Now, if you go and take a look at that, we don't really have, I thought I put that in there. Let's go back and try that one more time. So we don't really have a higher correlation than that, right? So I think that's pretty much the highest correlation that we could have. So I don't think it's the Fed. I think it's geopolitical uncertainty. I don't think it's Blinken. I think it's the escalation of what you have going on with Iran and that uncertainty. Because I was talking to someone about this earlier today. Right now, you have a lot of uncertainty, right? And you may have a change of administration in November. Well, if you were an outside foreign influence, would you want to deal with the issues now, or do you want to deal with them when you might have a change in administration? You never know if we're going to have a change in administration or not. But what would you want to deal with? The devil you know or the devil you don't know, right? So you might escalate things now just to get it done because you know who you're dealing with. And I think that might be some of that. But if you look at this makes the most sense to me. But what doesn't really follow through is the lack of leadership in gold. But I think you have to go on this premise. Now this, again, I'm going to just throw this in, and we're going to look at the XLE names during the same period of time. Well, XLE, they still sold stock. Watch XOP. They're still selling down. They're still selling names. Now go take a look at gold. I mean, go take a look at uranium. So what transpired here? Only one thing happened. Oil went up and people bought the bond market. So what is this telling you? Right? You can see how uranium's dropping. Let's go back to 4 o'clock. So what is this telling us? Right? This is telling us, and we can look at all this stuff all we want. And this is showing us at 3 o'clock. But all we have is crude. I mean, that's really the only thing that we have to go off of. Now, if we go here, and I'm just going to pull up the major sectors here and show you. And I put a couple other in here tonight just for time's sake to show you this. And we're going to put the SPY in here and show you. So I'm going to mark off these levels. Here's 1 o'clock with Blinken. And here's 2 o'clock. And the only difference that we have is the spike in oil at 2 o'clock. So if we go here and we rein this back, what do you say? We only have one thing that's up. Even if you look at the bond market, that's the only thing that's up. It doesn't make sense for these things to implode. It makes zero sense for them to actually implode like this. Absolutely no sense whatsoever. So the question becomes, are they going to continue to implode or are they not going to implode? And the answer is we don't know yet. But it seems to me what it is get me out of everything. I'm not going to want to own stock going into the weekend because things could get out of hand. Now, why is it important to try and spend the amount of time we spent on this? Because you're going to go into tomorrow. Please listen to these words. You could have a good non-farm payrolls number that makes tech and everything rally. And then you could see a pullback, right? That is a possibility. We don't know what's going to happen because nobody called us and told us what was going to happen, right? So if no one's going to call us and tell us what's going to happen, all we can go on is this bar. That's all we have, right? And that bar is nasty, like capital N nasty. I get it. And we're going to look at some of these charts. But what we're seeing is a reaction to uncertainty. And I think that uncertainty has more to do with Israel and the escalation and what we're seeing happen with Iran than anything else. And if that's the case, if that's the case, then Friday into the end of the day, you're going to have people that aren't going to want to own stocks. Why would you want to own stocks? Why would you take the risk? You don't know what's going to happen. Now, that could benefit if you wanted to look at Latin American stocks. It could also benefit us if we want to take a look at like defense into the weekend, right? Lockheed Martin was up 1%, I think, from the open. They weren't lighting the world on fire, right? You didn't see like these major moves in these names. Like we're definitely going to war. So I think that's very important for us to get. And I think that's very important for us to understand. Okay. Now, after hours, we are seeing a little bit of a rally in some things. I would say this, based upon this sell-off, just so you understand kind of where my head is, from how we broke out to reversed, that is a news-driven event. That is uncertainty that nobody was expecting. So I think there's a couple things at play here. And I'm speculating. So let me be real clear about that. No one called me, and I have no idea what I'm talking about. But I'm going to tell you anyway. I think that people think that non-farm payrolls is going to be better or not as bad as we think. That's where my head is with it, right? And I think that they were positioning themselves for that. And I think that's why we rallied. I think one of the reasons it turned to what it turned to was because you have an escalation that was not expected, right? We talk about this concept all the time, reflexivity. I'm going to find this and I'll rerun it for you. But I'll clip it out so you don't have to go through the whole 45-minute video to find the 7 minutes I'm talking about. But you have expectations that are set. And that's why you had a 2% move today there. That's why you had this move in the NASDAQ, right? That's why these moves existed. That's why AMD should never have been where it is. But you guys all know how I feel about AMD anyway. But when you start looking at this, I mean, that's a higher high. And then you just went down like that is get me out. I'll deal with it next week. I'll deal with it Monday. Get me out. I'll deal with it on Monday. Right? When you start to see this kind of stuff, This is what you want to pay attention to, okay? This is telling you something different. NVIDIA, here, right? That was a clear break. I tried 2 times, 3 times to pick off a bottom. Tried to pick off a bottom at my super secret line. How'd that work out for me? Not very well. I think it's very important for people to understand this is not an easy market, okay? It's not supposed to be easy. If it was easy, everybody would do it. So you guys have to start understanding this stuff, and make sure you subscribe to the channel. There's a really good chance I'm going to start doing like YouTube lives where I just take questions, and they're going to be impromptu. I'm not going to schedule them because of my personal schedule and how busy I am, but I might just pop on and just take questions for a half hour or 45 minutes. This is not supposed to be easy, guys. So the idea that someone's going to tell you that this was a super easy way that was supposed to happen, I mean, maybe they could tell you the next time that, someone's going to attack Iran since this was so easy to spot, right? Because the people that are telling you that this is because of the bond market, they're not right. Okay, the bond market does not rally because they're not going to cut rates. The bond market rallies because it's a flight to safety. What concerns me about the flight to safety is that you're not seeing the full flight to safety. They're not buying gold. Okay? They're not. They didn't go out there and buy Exxon, right? They didn't. They sold these names. Okay? They actually sold them. Now you rallied a little bit. You're trying to bid up, but I don't even know that you're really there. I think that's a very important distinction. I think it's one we have to pay attention to. Now, as far as very specific names and looking at NVIDIA, once you cracked, that was it. It was just open for the day, right? And you can see this. But what's going to happen tomorrow if you come in and you have a hot or a weak non-farm payrolls? Well, this thing's going to go up dramatically because now the probability of a rate cut is going to be significant. The issue with it is for how long is that going to continue? Meaning we don't know how that's going to go, right? And we don't know how it's going to go because we don't know how much selling is going to be during the day because you're going to have this uncertainty going into the weekend. You're going to want to watch the weekend data. There was some really good news out there today on some of these names. I'm going to go through a couple of these names, but I really want you to get this point. It's really important to get this, right? Number one, this is not an easy market. Okay? It's just not. And you're seeing a lot of twists and turns, and April is hard. It is probably going to be the hardest month. Historically, any momentum trader, their worst month historically is going to be now. And you don't have corporate buybacks. So there's nothing wrong with just saying, you know what? I'm going to take a break. We're getting out of the way. A couple things that I think people need to be aware of. With this creators, what they're doing with creators and allowing creators to start getting paid again, this is exactly what drove YouTube's growth. When YouTube started paying people as partners for putting content on there and they started getting paid for the content, that's when they got the growth. That's what Meta did today. The only reason Meta's down is because of this news that's floating out there, right? And again, I'm going on the assumption that it's correlated to what we saw in the oil market. That's the highest correlation that I could find from a timing standpoint that made the most sense when I went through all the asset classes. So now if I know that, what does that tell me? Well, then I'd probably want to look at Meta. Well, how about Micron? How was that doing? It was having the time of its life, wasn't it? Right? We're hitting new highs. You watched that 126 level pretty clearly. When you broke that, that was pretty much it. But it was off to the races. Dell, off to the races. And then what happens? Right? We just break down. But where did Dell really go? Back to break even, down a little bit lower, but you stopped here at the neckline. So these are names that we would probably want to look at into the rally. And I think that they'll go for the big dogs. I think Google's got a lot of problems, especially with what they said about what they're trying to do with AI and the fact that they want to charge. I mean, there was something called the Ask Jeeves a long time ago, and I make light and I make jokes, but out with the old, in with the new sometimes. That does happen. I don't know how they're going to position themselves, but this would not be, and I'm going to just be blunt about this too. I've been short this for a while, 2 days. I think it's important for me to state that's where I'm at. But you don't have to trade tomorrow. Just understand that, okay? You want to focus on what's happening, and you want to focus on names like Spotify, right? You want to focus on these names that are breaking out, that are increasing their tiers, that are increasing their revenues. I mean, you guys have to start understanding this from starting standpoint. This is game over, right? Like Spotify won, right? They got rid of all the bad podcasts. They stopped paying people, billions of dollars of bad podcasts. They got great podcasts on there now. They just raised prices. They have a different tier. So these were the leaders that actually held up today. I would tell you to focus on the leaders. Where I would be careful is anything interest rate sensitive. You're going to see a big rally in the interest rate sensitive names, and then they're going to fade. So I'll give you a really good example of this. So this happened today. I was actually short XBI, and I had a bunch of LABU, and you can see the break and the rally to the neckline, right? And then what happened? They faded. Okay, so they're fading the interest rate trade, even though rates are probably going to be cut sooner than later. And if you think about it, it's not Kashkari that probably dropped the yields, right? It's probably the flight to safety. And if you have an escalation of war, if you start tying all this together, and I was trying to figure this out earlier in the day, I couldn't figure out the pieces. Now I can figure them out now. If you have escalation of war, right? The light bulb went off. There I go again thinking. Then what's going to happen? Well, you're going to have slower commerce. If you have slower commerce, people are going to buy less stuff. I couldn't figure out for the life of me why all day we just saw dumping and dumping in all the consumer discretionary names. So it's very clear that people think that you're going to have a slower economy or a reason for them to cut rates sooner, and something might be affecting the consumer. And when you start looking at these names like Ross Stores or Kohl's, they went after all of them today. I mean, there was no shelter. There was literally no shelter anywhere in these names today, right? They all got hit and they all closed near lows. But it wasn't just then that it was doing it. I think this is really important. It's just like, you always say somebody always knows, right? But when you start looking at these names during the day, let's go to the 4th, and you look at like what's happened. Yep, sure, you got hit here again, right? But you really got hit off the open. And again, it really didn't matter which name it was. It was all really like the same soup reheated, just over and over again. It was just the same trade over and over and over again. And that's something we have to pay attention to. Now, if the market gets weak tomorrow, you're going to want to look at the high names. Okay, the names. I know this is long-winded, but there's a lot that you need to know for tomorrow. You need to look at the names, okay, that are heavily shorted. Tesla is heavily shorted. They will cover the heavily shorted names to go find new names to short. That's it.